So PepsiCo reported their earnings, and despite beating estimates, Wall Street did not like the anticipated revenue growth. On the news, the stock fell 4.5%, or roughly $7. Now, price finds itself at a precarious level. Why do I say that? Well, if you zoom out to the monthly chart, this is a monthly buy level near that $146 level. We're going to take off this red horizontal rectangle that was weekly buy levels, but prices just slashed through that. The only thing saving price right now is going to be if buyers feel that price is at a discount. Otherwise, you do have another level down near $133. That would be your next level of interest if you get a candle close. This is the beginning of the month. If you get a candle close below 142-ish. Now, before we continue with the analysis, because I want to show you something on the weekly chart, because you did get a bounce, let's actually get into the results. And it is coming from investing.com. So PepsiCo has reported per share income in the fourth quarter that top estimates, although organic revenue growth was more tepid than anticipated as price hikes weighed on demand from cost-conscious U.S. shoppers. The food and beverage firm behind brands like Frito-Lay chips and Mountain Dew posted a 2.1 uptick in organic sales during the quarter, ending on December 28th. But that was short of estimates of 2.27%. The CEO said in the statement that the company remained resilient in 2024 despite subdued performance in its North American operations, which was key to the business. A jump in the prices of food and other products have led many consumers to opt for cheaper products and shop less at convenience stores, eating away at the larger contributor to PepsiCo's beverage food. So you got two things going for themselves. You got inflation increasing their raw material input, and then you have customers on the back end buying less. CEO also says that disruption from geopolitical conflicts in some international markets also hit returns. I would also say that the U.S. dollar, as strong as it has been, is hurting U.S. companies who have a large presence overseas. All right, let's get back to the charts. And what I want to show you is that this level, zoom down to the daily chart first so you can see, we did get that bounce as anticipated, but we're still in a downtrend. And so potentially bounces are just reactions before price continues the next impulse move down, potentially. Now, you can see on the weekly chart, you did have a base rally, and that was and still is weekly sell level. However, typically you don't want to go against, if you have a higher time frame level of interest against a smaller one. Again, you have this monthly going against the weekly, although it was nested within this resistance support band. Again, drilling down to the daily chart, you did get a reaction. Now the question is price in the process of forming a double bottom? Based on the fundamentals, no. Again, Wall Street's not happy with the results, so we could see price trickle down to this next level. That's where your next big level of liquidity is at, where the smart money would get their positions filled to potentially go long. However, let's see over the coming weeks. Let's see how the U.S. markets react to tariff continued news. Again, it's the weekly chart, and the chart is suggesting now is not the time to get long or short PepsiCo. Thanks for watching. Subscribe. Please like the video.